Hello, dear George. How are you today?
Hey, good evening, Jamal. How are you, my friend? I am very well, thank you. Especially now, with all the dramas that that has occurred, and many people misunderstood the whole situation with all the caring and loving that you guys have just extended. It's just been amazing. Just want to make sure, assure everybody that I'm quite all right. I was not admitted into hospital. I drove myself to hospital in my own car with my wife with me. Just that I had some abnormal feelings that I was experiencing in my body, which of course I don't take lightly. So I wanted to make sure everything's okay. So I went to the hospital to get all the tests done in one hit at the same time, and came home the same night, making sure that everything was clear and negative and there was no issues. Because when it comes to the heart, the fact that I do have already a heart condition, a stent in place. I don't take things lightly. I always make sure that there has not been an angina attack or a heart attack, and it was the case that it was all clear. So I want everybody to know that everything is perfect, and there's a difference between driven to hospital and you take yourself to hospital to do some testing.
Yeah, we are very happy to hear that you're doing fine, George, and it's true what you say. It's always a good idea to do something preventively rather than to wait until, something is too late. So,
Absolutely.
yeah, thank you so much, George, that you're so committed and you said, you know what, I want to do this podcast. As you know, I said, look, we can take a break, but as committed as you are and you wanted to do it. So today, again, a special thanks to you. Always take care of your health, my dear. I know you live very healthy, but yeah, it's important to, keep an eye on things. I fully agree. We need you, George.
Well, I tell you what, Jamal, let us take this opportunity actually to pass a message on to a lot of the younger generation, and that is a lot of people live so carelessly about their own health and about the food they put into their bodies. And I tell you what, it was the diet that I used to live on, and of course, mixed with some stress that I had a few years ago, about 6 years ago or so, that
Yeah.
created this heart attack that I had 2 years ago. And I tell you what, I urge everybody to really clean up with their diet and to get rid of as much stress as possible because, I paid the price and many people pay the price. I'm 64 years of age, as a lot of people know. I urge them at a younger age to start planning their future when it comes to health at a younger age and start feeding their bodies the proper healthy food and get away from all the garbage processed food and takeaway garbage and all that sort of jazz because Jamal, you and I know nothing in life is free. Everything has a price. And good or bad, there's a price to everything in life. And guys, I'm telling you, you don't want to go down that road at a later age and start backpedaling then. And people say, oh, you live once. No, 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 no. The thing is, people get sick, and all of a sudden, you see them running to the doctors. Well, hang on a minute. If you don't care, why do you keep going to that doctor every time you get sick? I really think this should be a good wake-up call for a lot of people.
Yeah, I think that's very sound advice, and I fully agree. It's important to, keep an eye on the diet, to do some sports, to do some meditation, and to make sure there's mental health, and to have proper sleep. And, you know, in particular, when it comes to training, George, it's not very healthy to sit so much. The human body was not designed to sit so much as we do these days. So everybody, should really take care of that and make sure that they have a schedule, some kind of routine, where they have some physical activity, even if it's just a walk in the park, that they don't eat too many, sweets and all that. Sometimes, there are phases, George, where I'm more aware of this, and there are phases where, for example, I would drink a bit too much of coffee and that kind of stuff. But I didn't tell you that, George, but in my life, I never drank a single drop of alcohol, believe it or not.
Wow.
I never smoked a single cigarette neither. I introduced a new tradition some time ago that I would smoke a cigar, I think one every 3 months or something like that. But that's as much as I would smoke on that side. But otherwise, I keep away from that kind of stuff. And I think in trading, George, in particular, because you have to really be focused, you have to implement as well as you can, and you have to have a very clear mind. I think in particular it's important to also have some discipline. Of course, we all, have our days where we cheat a bit. I have days where I eat loads of chocolate, George, and then, I try to balance it out by going to the gym the next day and so on. But yeah, as long as there's some awareness, no?
Well, they say clean bodies have clean minds.
Yeah, I would fully agree with that,
I'm,
and
I'm like you. I gave cigarettes away 64 years ago. Never smoked in my life, and I'm a non-drinker either. I mean, in summertime, I may have, half a glass of beer. That's about all. Or if I'm at somebody's house, and a quarter glass of wine. That's about as much as I drink in a form of alcohol. I'm really not an alcohol lover at all.
that's very good, George. Okay, I mean, so last podcast you really explained a lot about the psychology. It was very good. Today, George will show some very, very interesting things, how he approaches a price chart, how he approaches the market. He will also give an example. And just a little disclaimer. So this video doesn't represent any type of investment advice or something like this. All we're doing here is giving people hints and, a pointer towards what they should look at, what they can study. As George and me have said multiple times now, there is no shortcut, there is no get rich quick scheme. You have to put in the work, and most people don't want to do that. That's a reality. So keep that in mind. In fact, a big part of our podcast was that kind of disclaimer. We want to tell how it really is. We do not want to, excuse me, give you a wrong impression, because in that industry there are certain entities and parties. They want to put the message across that it would be easy. They want you to open a trading account and to place some real money, and then what happens, you end up as a sitting duck because you actually do not have an understanding of what's going on in the market, and the odds are against you anyways. So that's a very important point to understand. So yeah, very excited about today. I'm sure George will give us some really, really nice insights, and maybe you are able to incorporate that in your own approach in one way or another. And yeah, let's get straight to it, George.
Okay, well, Jamal, last video, as you said, it was actually strictly based on the psychology applied by the market maker to the price action, and as importantly, was the psychology of the trader himself. Now, I'm not a person that dwells on negative. I'm a highly positive person, but in the same token, unfortunately, there are a few ignorants out there that mocked the last video vocally, and it's a shame because I can tell you now, and my view is this: any person who ignored the previous podcast we did is an absolute fool. Why? Because psychology is extremely, extremely important, and we stress on the point that the psychology we talked about, it's not the kind of psychology that is talked about out there. Some people said, oh, there's nothing new. No, no. You go and show me a video that will talk about the kind of psychology we talked about. And it is something that does not exist as far as I'm concerned, not to the depth of what we did. Now, psychology of a trader, the way I talked about it, is it gives the trader the ability to be able to view the market with the right mindset, to approach the market with the right mindset. It establishes the kind of foundation for a trader to be able to put a very successful trading plan, a very successful money compounding plan. Now, notice I talk about money compounding plans, not money management plans, because a money compounding plan automatically is going to give you your money management plan, except it actually compounds your money, does not just protect you. So it's a very powerful combination when you put together a compounding trading plan, which my plans are compounding. Why? Because I trade in baskets, and couple that with a money compounding plan together. That money compounding plan, the way I do it, it actually demonstrates to me at any given moment what firing power I have behind me in the number of trades I can enter. Okay, that's a very, very important point. Maybe I can bring that back on board when I talk about entries and charts and things like that. But these are very, very powerful combinations to have together. Now, before I start tonight, I would like to just bring something to the table for all the wonderful fellow traders out there. As everybody know already, I'm 64 years of age, Jamal, and I'm still very healthy. I'm still very young. Been in this game with total association with the trading arena, about 21 years since 1998. I did about somewhere between 14 and 16 years, continuous years. But I want to just lay out on the table straight away now that neither yourself, Jamal, nor myself are slaves to anybody. We do this, we do this from the love of our hearts and for the love that we have for humanity, number one, and the love we have for our fellow human beings and our fellow traders. So we do this for the love of people. So, we are not under any obligation to do anything. At my age and the years that I've been in this game, Jamal, and I mean the years I've been in this game, when you've been at it for so long, I have no tolerance and no patience for ignorance. I have no tolerance and no patience for lazy people. I have the same non-tolerance and non-patience for negative people. Because as I said it before, professionals seek, amateurs knock and mock. So we don't care about amateurs because they're negative. They are dead in my eyes. I don't care about them. What we do is for the minority of people out there who are serious about wanting to succeed in this game. So statistics show from brokers, which is figures that are obliged to supply under the Australian government law, that around 80% of traders on their books are losing traders. So that's a very, very serious and dangerous high percentage of losing traders around the Australian arena. And I am sure if it exists in the Australian arena, it exists around the world because it's human nature. So what we are going to be sharing tonight is not detailed stuff. I will not sit here teach anybody how to trade. I am not an educator, and I will not try to teach people how to trade. So what I'm sharing with everybody tonight, I will go to the deepest level to show them the precision, the depth, and the detail, what is entailed when I sit down and trade on an intraday level. Now, I will show one example only of that. Why? Because once they can understand what they need to look for and the depth of what exists in this industry, which many traders are blinded and naive, and some are ignorant to the depth and the precision that happens in this industry, they can teach themselves how to trade. So no, as you said, we're not teachers. We're not giving any advice. We're just sharing what we know for the benefit of our fellow traders. So I will be going through the filters that I apply, which are very, very powerful, and I'll give a detailed breakdown how I break the move of that market. In my zone, I trade the Euro and the London sessions as well as the Asia sessions. So I will give the traders an absolute clear breakdown of how I systematically break down the move, and I will show them how visible psychology is in this business. The psychology applied by the market maker in this example, I will show you exactly how it's done, how visible it is on the chart, and how easy it is to determine. So each trader, unfortunately, like I did for all this time by my own, I never had a George, like I said, next to me. Each trader has to be their own teacher, and each trader has to go and put in the work, roll their sleeves up, get off their fat backsides, and do the work themselves. Unfortunately, Jamal, that's the way it has to be, because the best way to learn is by doing. Because I can sit here and talk, you and I, for whatever days, it will never happen for any trader. They have to do their own learning, and that is the foundation to how I will be sharing things here.
Yes, just a few points regarding that. I fully understand what you mean. Um, Maybe also I tell a bit from my own experience. As you know, George, I have done a lot of work completely for free for quite some time now. So, I first did those the live trade videos for something like 2 years. Then I did the threads for a year. Now we're doing these videos and podcasts. All this is completely free. We're not charging for this podcast. It's not a course or anything like that. So of course it's based on goodwill, as you said. Just a comment on the response of the community. I know we have talked about it a few times, but one is to understand that, in my view at least, George, the vast majority of people is nice. People, they appreciate if they get some help or pointers. And the thing is, those people, they leave a nice message or like, and then that's it. Unfortunately, there is also this breed of very frustrated people. People who have probably already lost a lot in trading, or who have been scammed or whatever it is. They have a lot of frustration, and they are very keen on attacking anything which is put on their plate, so to speak. So we both have made that experience that these people exist, of course. However, as you know, George, we also have seen how many of those people have eventually turned around. But my advice to you guys, look, if you're one of those people who is very negative and frustrated and skeptical, and look, you first have to work on your mindset, okay, before you even can think about, again, doing something in the trading arena. First, work on yourself, work on your personality, work on the issues you have. And in fact, that's a good advice to anyone. Always have some self-awareness. Understand what kind of personality you have. What are your strengths and weaknesses? What are your biases? I can't emphasize the point enough. Be aware of that. What's your self-image? What are your assumptions? Be very careful with your assumptions. And the fact is, however, George, whenever you want to do something significant, that's something I had to learn. Whenever you want to do something significant, there will be that minority of people who tries to, attack in whatever way. However, I've also made the experience that people in that group, they, as they go through their own development, they can turn around. They can have some, insight suddenly and understand that they were ignorant. So in general, as you know, George, we are both very positive people. I'm very optimistic in general. Of course, you have to be realistic in your assessment, but you have to have an optimistic mindset. I would think, especially in trading. And yeah, what you said is true regarding the number you quoted, 80% losers. I think it's even higher if you would increase the time period where you measure. So, I mean, if by regulation, the retail brokers are required to quote a percentage of losing trades of their clients, and they do that on their advertisements. But if you would increase the time period of trading, that percentage would be more towards 95%. So yeah, it is a fact, and we all have lost at the beginning. That everybody has to go through it, and that leads me just to the last comment to what George has said. You have to internalize what you're doing, and that implies that, in my opinion, you can't just copy someone's approach, strategy, or whatever. You have to internalize, which means you have to make it your own. Now, if you want to make something your own, you have to sit down and understand what are the good points? What are the bad points? What works for me? What doesn't work for me? How can I come up with an own version of the market reality? And that's just as a last comment. Sorry, I don't want to talk too much, Josh, but just as a very last comment in that context, that what people didn't understand about my work, for example.
No,
I show the market causality, and what you will see now with George's example. These are stop runs. These are position runs. This is the smart money going after the dump money. Now, I have shown that reality day in and day out for quite some time for free. I've not shown the meta levels, but I've shown like all the basic, components. And, this is a reality. Now, how you approach the reality, in which way you want to trade it, that's on another chapter of the book. I've shown my way of trading. I've pretty much demonstrated my manual trading approach towards a causality. I've made trade videos where you see how I trade. What else do you want? But of course, people can come up with their own ways. Yeah, that you can find your own setups. You can find your own, approach. And look, George is now showing his approach. Okay, he as you will see, he has a lot of filters. He has particular setups. Yeah, for example, as we will show now, after the main stop run has been done and there's an exhaustion move back into the range and so on and so on. But he has all the filters in place, all the tools which enable him to implement that approach in a very good way. Anyways, sorry for talking so much.
no, Jamal, that was brilliant. That was absolutely brilliant. Thank you for actually adding that on. And you're right. If unfortunately for a lot of people out there, and look, guys, we would love it if you could kindly just, when you watch this podcast, do us a favor, not for any other reason. If you really think it's good, tick up, give it a thumbs up. If you don't think it's worth it, well, give us a thumbs down. We'd like to know what percentage of people see value in what is happening and what's not. So we would appreciate your active response, whether it's a thumbs up or thumbs down, because we don't care. It does not change. Well, that's reality, Jamal, whether they like it or not. I'm a straight shooter. Everybody knows George. I really couldn't care less about what anybody thinks, because people's opinions mean nothing to me. Yeah. And that's a fact. Why? If a person's opinion of you affects you, then a skunk would have been extinct a long time ago from this earth. He would have vanished. Why? Because everybody knocks a skunk. Everybody oh, you stink like a skunk. People's opinions does not change me or Jamal or any of the listeners or fellow traders. People's opinions will never change you as a person. That's just their opinion. Why? Because it's verbal. It means nothing. So I really don't care what people think, because their opinion is not going to change my 98 to 99% consistency and accuracy, Jamal. Agree?
Yes.
Thank you. Now, whether they like it or not, this is the harsh reality. And that is, unfortunately, only 1 to 2% of people in this world are innovators. Everybody else is a sheep, and they are imitators. And like Jamal said, usually no more than about 5% in any field in this world normally truly succeed in what they are doing. I agree with you, Jamal. So unfortunately, you got to ask yourself, not me, not Jamal. It makes no difference to us. We are successful already. It's up to you. You got to look in that mirror and ask yourself, what do I want to be? Do I want a sheep and a loser? Or do I truly want to be one of the successful ones in this industry? Because I tell you now, if you did not like last podcast, I suggest now, turn off this podcast, don't waste your time, and just go and do whatever you want to do besides this thing, because we are not for you. I can tell you that right now, because we are not for the average sheep out there. What I do is for the very small percentage of people who are prepared to do the work and are interested in becoming masters of this trading arena. And it's as simple as that, Jamal.
Yeah, absolutely. At the end of the day, and if you look at, for example, all the trading content out there, it is a small community in terms of absolute numbers, George. We are not, I don't think there's any channel on FX trading which is not a marketing channel and which has like more than, let's say, 150,000 views or 200,000 views. Like most of them, they're very, very small. And even the good content out there, not many people view that stuff. And we are fully aware of this. And why is that, George? Because it is a difficult game. There are no legal barriers to entry, but there are, barriers to entry in terms of what's required. And look, it's no surprise that most people lose. It's no shame to lose in FX neither. Yeah, that should also be said, maybe, George, because people look. I have seen intelligent and committed people completely fail. People who are smart and who try to put in the work, but that still wasn't enough because, for example, George, they didn't understand the manipulation. They were not willing to accept that this market is not driven by supply and demand. And on a regular basis, George, I get people on my videos or on the threads, and there's a certain breed of those people, and they come from supply and demand business. And you know what, George? Most of the time, these are guys who are already invested in their belief system. They already assumed that FX is driven by supply and demand. So I coming now completely telling the opposite, showing how manipulation is the main driver in FX. They feel offended, George. They feel offended by the evidence I deliver. Because what happens? They have to admit that their basic assumptions about FX and economics even are completely wrong. Who wants to do that? Whether these are people who are in trading for years, or whether these are academics who have built whole careers on these assumptions. These people, they tend to be offended by the truth. And that's a very interesting, phenomenon. But yeah, exactly. It comes back to the boundless mindset you have described last time. Look, George, sorry, just as a footnote, when I started studying economics as a student, yes, George, I remember that one day where I was so excited because on that day, I had to read a chapter on why does the stock price go up or down. So can you imagine, George, me in my early 20s, and then being so excited, I thought I go to the library now, I open the book and I'm going to study every single sentence in depth, and I'm going to learn why does the stock go up and down, and this will be a skill I will have for the rest of my life, right, George? With such big eyes, so many expectations, a young guy going to that library, putting down the book, opening it, and what is the explanation, George? Yeah, a stock price is driven by supply and demand.
Yeah.
And you should have seen my face. I was like, wait a second, that's it? What do you mean supply and demand? So, of course, look, let me just to finish that point. Yes, of course, supply and demand exists in other markets, and also it does exist. I'm not saying it doesn't exist. However, one has to understand that in FX today, not 40 years ago, today, manipulation is a driving force. I mean, what else do you want to see? I have shown all the position runs, the stop runs, the principles in front of people's eyes. Now George shows how, like the market makers clean out, the range and all that. Look, this is what drives. It's not that there's, for example, suddenly more buyers and sellers and the price turns. I mean, that's an illusion. And I have experienced, George, that people who believe in that, they really, really, they don't want to accept what I'm showing. And even if it's more and more evidence, it takes a lot to turn them around.
Jamal, unfortunately, whether they like it or not, it's reality. And tonight, what I'm going to show, it just absolutely no doubt whatsoever. I'm going to show you how clear that manipulation and psychology is applied.
Yeah.
On the chart, I'm going to show you on the chart how it happens.
Okay, let's get it on, George.
Well, the people you talked about, by the way, and I don't care where they come from, I don't care which university, and I don't care how smart they think they are, I don't care what certificates they hold, because certificates in my book, unfortunately, they belong in one place, and that's called the bathroom. In case you don't have toilet paper, you need to use them, because certificates are useless, okay, unless you have the right knowledge and you know how to apply that knowledge. And how does that come? Boundless, number one point. And number two, a person needs to be fully committed. If they're not fully committed with a boundless mindset, I don't care what degrees they hold, they're useless. I'm a high school dropout with a 98 to 99% accuracy. Okay, that says something, doesn't it?
Yes.
People don't have to believe this, by the way. Let me just put some pointers straight away here. I'm not looking for credits. I'm not looking for fame. I'm not looking for patting on my shoulder. I'm not here to be recognized. Nothing, 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 absolutely nothing. Okay? Jamal and I know each other. We have unconditional love for one another and respect, and we know how successful we are. We don't need anybody's approval. We're doing this for your sake. We're doing this because we have unconditional love for humanity, both of us. We
Yes.
don't need any recognition, guys. We don't need any credits. We don't need anything. But we thank you anyway. The question here is this: do it for you, not for us. It makes no difference to us. I can only speak for myself. So that's the reality, guys. Understand that. We're not doing this for any credits or any, oh, well done. No, 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 no. But thank you anyway. Okay, Jamal, so let's get going. This is it, boundless and commitment. Why? As soon as you become boundless, you will start to see what I was able to see. And everything I'm going to show you guys tonight, I never was shown this. This is my own findings. And Jamal knows that what I do is exactly what he does, except I did it without anything at all. I did it manually, off a lot of hours, a lot of dedication, an unconditional commitment to want to succeed. I was able to see everything. That's all it's required from you. Trust me.
And that's amazing, George, because you are one in a million with that. Because with a minimum of tools to still get there. That's why I highly respect your work, George. Because as you know, I come from a perspective where I have a lot of IT pre-work. Like a lot of tools which allowed me to exactly analyze how on the market structure level how do the different groups of traders interact with their stop accumulations, their limits, their positions, and so on. But to come from like a perspective of minimum tools, but universal, understanding, that's quite amazing. And that's also why it was important for me, George, to do this podcast with you to show people that it's possible. I've always said it's not easy, it's difficult, but it's possible. And so that's also why everyone appreciates the thread you have done, and the explanations.
Lovely. Well, I'm going to drill down, Jamal. Everything I do is manual. I am a camel rider, and technology and I don't mix, as I said before. So I'm going to break down exactly what Jamal shares on his project, down from the top level right down to the bottom of it. Manually, I'm going to break it all down for you on the chart and show you exactly the mechanics of how it's done, what Jamal keeps talking about and he's been talking about for such a long time. And watch this unfold one part at a time on how you can zoom in so tightly to the market that you can actually get it so damn close, it's not funny. So let's go. Before we start, I would like to go through this quickly.
Yeah.
The market will only do two things and two things only. The market will, from anywhere, any point you are in the morning, you start, you look at your daily chart, you've got from where the price is, you've got a daily bar before you here. Okay, that's today. The market will either go up and take out the stops above this day, or go down and take out the stops below this day. There's nothing else that happens in this business. That's summarized in one picture. It's as simple as that, Jamal. Two things the market will do. Will get up and take out the stops above here, or go down and take out the stops below this day before here. That's it, nothing else. Sometimes it'll go down long enough to take out 1 or 2 days in a row, or 3 days or whatever, and vice versa up here, but that's all the market does. And like you said, supply and demand is available. Yes, it exists in this business, but it's not, when we talk about supply and demand, Jamal and I, we're talking about banks that need to transact their money. Big companies need to transact their money, paying overseas suppliers, and banks interchanging money and everything. But that's not the driving force behind the market. The driving force behind the market is one purpose and one purpose only. and it's money making. That's all. It's by the market maker, the one power. That's all they are in it for, making money. It's nothing to do with this. Yes, that exists, but that's the wrong supply and demand, for heaven's sake. The market does not need supply and demand. The market does not need liquidity. It is its own liquidity. Okay, that's the reality, and that's what it is. Take a snapshot of this, guys. Two reasons only: go up and take out the stops above the previous day's high, or down below the previous day's low. That's it. There's nothing else. Okay, always refer to the daily chart for the bias. Thanks to Michael Houston, that was his idea. Okay, now, and it's so true. Okay, using moving averages is great to help that. Also, using your 4-hourly and 1-hourly charts will give you an idea as to what side the market will go, because you can see it. Okay, and for any in a higher time frame, just keep going in the fractal nature of the market. But that's all there is. Yeah, that's all the market does. These two things. That's how simple this business is. It's so damn simple that there's only two things that can happen. But due to its simplicity, it's so hard. Okay, why? Because it's psychology. Until you get a grip of that psychology, how it's applied and how you can break it down, forget it. As simple as this business is, you're gonna fail. Full stop. Fair enough, Jamal?
Yes, I mean, people, they sit in front of the price chart and then they think, George, look, it moved 60 pips today. How hard can it be to take out 5 or 10 pips a day of that move? At the end of the day, it's two-dimensional. I only need to find a way to pocket 10, 20 pips of that move a day. And, they think this is an easy game. No, no, no. It looks easy, but it's complex. And, please pay attention to what just was explained by George. That is the reality of the market, okay? And look, I don't want to go into depth regarding some of those technicalities right here because we get off track. But I've made videos about that. I've written a lot about exactly that topic and the mechanics as well. If you're interested in that, if you want to understand, okay, what are the precise mechanics? Well, check out the other videos.
Okay, so we'll go to the next part now.
Yeah.
I'll go to this chart here, and I'll press Control and press Home, and that'll take me back to my back history. I've got 5,000 bars fed into here. I'm going to show traders how to actually learn the behavior of the market maker. I'm going to show them how to study charts and how to learn how psychology is applied. Some people will actually laugh at this and mock this, like some of the ignorance that are out there that have mocked already. But like we said, we don't care about them. They are a bunch of losers, and I could not care less. Now, as you can see from day to day, okay, there's the previous day, there's the high taken out. Okay, there's the day, that's an inside day, and there's the low. There's the low of the previous day, there it is taken out. There's the next day's low, they stop before it, and the next day they take it out. As you can see, the market will just go systematically from one day to the next. There's, like I said, there's the top taken out. There's that low, there it is taken out. There's the next, these lows are together. There's the next low, there's the hesitation, there's the blow through. There's the next day's low, and there's the break. As you can see, it just goes one day to the next. That's all it does. So my advice to you is this. You go back to, in my opinion, this is my suggestion to everybody. In my project on Forex Factory, which a lot of you now have got the, I'm sure the link, post 2407. Jamal, I'm sure you can put the link to this video, the project, and they can go and have a look at how it's done in full detail. 2407 is the post number. Now, this is what I suggest. You go look for the market when it goes and does a pyramid, and then we'll do a valley. Okay? That's funny. I'm surprised. Oh, hang on a minute. Sorry. Okay, here we go. So, as we can see, there's a valley and there's a pyramid. So what you do, you go back as far as you want. I suggest minimum 1 year to 1.5 years on every pair. Have a look at these valleys coming down, and take your line and look down and start drawing lines on these stops. I'm going to go and show them how it should be done. And it's up to each individual trader to do this exercise. There's a top on the way down. There's another top on the way down. Okay, that's a 15-minute chart, of course. And okay, there's a top there. There's another cluster here. There's another one here. And there's another one here. There's another one here. Some people will knock this and say it's nothing. But there we are coming down. There's all the targets on the way down. These are all the tops. Okay. Now, there's another one, little one here. Okay. Now, these are very, very important on the way down. Okay. Then what you do, you get to the bottom of the run and you start to look at the behavior. There's the low. There's an equal low. You see, they do a low in the morning, and then they come down and they do a lower low. They're cleaning out all the buyers that accumulated from the morning of that day. And then that's a stop hunt, like you talk about, Jamal. Now, yeah, there's the high that was created the day before. There's a lower high. There's the hesitation before this top here on the left. And there's the blow through. You see this bar here? That's how they blew through all these stops here. And where did it stop? At the next station there. They retrace and they blow through that station there. And where did they stop? At the next station. This is systematic. It happens all the time, guys. Now, watch this. There's the next target. Watch the hesitation. There's the continuation. They get to it. They hardly break through it. Then they accumulate here and one bar. It already cleaned out that level. See it? Properly.
Yes.
Now, watch what they do. Look at these lows stacked up here. There's the clean out the next morning. They clean out all these lows here. That's how psychology is applied. It's the psychology, I call it the herd support mentality validation. They establish in traders' minds. There's that low there. They establish in traders' minds a support level here. Supposedly support is unable to break. They'll come down, clean it all out, and move on. It's as simple as that. This happens all the time on every time frame. This is why I am able to get 98 to 99% accuracy. Why? Because I've done the study and I have the understanding. Sorry, Jamal?
Yeah, what we called before, no, George, Pac-Man.
Yeah, Pac-Man. Now we have another top here. Okay, there is the top. There's the first top, and there's the lower top. There's another one here. Okay, two tops in the row there, as you can see. There's one here, of course, but as you can see, you see how the price hesitates. Look at the hesitation here. Where at? There it is. There's the top. You see the stop here? Look at the hesitation. There's the blow through to the next station. Hesitation, pull back. Look at that twice. They do it twice there. And there's the third time. See the 3 times there? See that, Jamal?
Yes, and as a footnote, what you called hesitation, George, that, yeah, the small consolidation there, I have called that time and range principle. So what's going on? The algos, the smart money algos, they have no rush, because if they go flat for a few hours, what happens, George? The stop accumulations just often get even closer, and more dump money enters on the wrong side.
Correct.
And that's an important thing to understand. So the timing aspect, as you say, George, the smart money will do exactly that. It will cover as much range as possible and clean out the stops as well as limits, by the way, we know. but they have no rush because of full price control. So by going in a consolidation for some time, first of all, they go flat, and some short-term scalpers, they get caught in those consolidations. And secondly, as it's shown here, they lure additional dumb money traders into the market, and most often, believe it or not, they even get them to put their stops closer into a cloud. And the other thing George has shown right here at the lows, you can see quite some trades I've documented where, and I know I have other words to describe it. I use plateau stops and fake support and resistance and so on. George has his own language, which is really good. So I will just do a few footnotes here and there. But I've shown a lot of those failed reversals. So they are faking a reversal with the up move. And then what's happening? They actually go below the low and clean out everyone who tries to buy the low and to have the stop rather close. Why do they do this? Because otherwise, people could place good risk-reward trades. They could just buy the low and have the stop not too far away and then make a nice ride up. So they can't allow that. That's why multiple times, as you can see in this example, look at 25th of April, multiple times they do that game. They fake a reversal up, and then they put in the fake support and resistance, and then they clean out the stops, and they do it a few times. And by doing that, they achieve those two goals simultaneously. They get people to actually increase their trades, or new people to come on the same side as they wanted. And secondly, they shake off people who were placed correctly, but who tried to trade with a very, very good risk reward and to have the stop rather close.
Okay, here we go, Jamal. I'll show examples everywhere. Everywhere you look, 15 minutes is a great chart. Now, look at this. There's a low, there's a low, there's a low. Look at all the lows stacked up there, all that cluster. Look at the clean out. But they have moved higher. As you can see, look at this market swings here. See that? Now, why do they do that? Because they created this low, they missed it here, right? They missed it there again. Okay, you see how they created that and they went higher. Why? The people that bought here, they got the stop losses here, correct?
Yeah.
So what they do, they move it higher. Why? They created so-called trend, which is nonsense. There's not such a thing. I'll explain to you why there's no trends. The question is, all the stop losses were here. When the market went higher and took out that high, all these traders moved their stop losses here. That's why
Yes.
they create trends. Why? They get the traders to feed out of their hand. Why? They use the trends, they create trends to get traders to move the stop losses up to the next level where they want them, to use them before the rundown.
Yes, and this example George is showing here is what I called a pre-stop run counter move. So as George showed, they first go in the opposite direction to clean out the other side, and then they do the resumption back to the original target. And
Yeah.
just to be explicit, of course, that knowledge as such is not sufficient to trade successfully. It's a basic understanding that's required, but that knowledge as such is not enough. So don't go there now and open a chart and look for a high and low and just place a trade, because obviously, as you will see soon, of course, there are situations where the price goes in one direction over several days, and then the clean out comes at a later point in time. So time, when it comes to trading, time plays an important role, of course. So that understanding and that demonstration here by George is fundamental, and unfortunately, you don't find this in a lot of videos or books. It's not really there in the awareness of all these authors. But this is a very fundamental principle one should really, really understand.
Now here you can see it again. See the top stacked up? There's the clean out. You see? Now
Yeah.
they do that all the time. If traders would care to open their eyes and start to be boundless in their thinking, is that there's a low. They want all the buyers here. They want to clean them out. What they do, they don't want to get down there to clean them out. They want them closer. They create a low and a higher high, so traders can trail their stop losses. Why? Because they want to collect these stops as quick as possible before they get down here, because it's all about balancing their book between the buy side and the sell side. So they keep manipulating traders' minds on what to believe in. And also, why did they create that low? Why did they miss it there once? Why did they miss it there twice? Why? Because they want traders to understand with a higher high, this market is going to retrace and rally further. And again, another retracement and rally further. So what they want to do, also, every time they come down to this strong level here after the break of that top, we're trending upwards, they want traders to keep buying every time. Why? Because they're loading sell orders for this down move, which is very obvious after the event in hindsight as to why that action was happening. Now, I will show these examples on multiple days later. I've got charts to show all the people out there. So I'm just showing people how did I study the market, looking at the tops and looking at how the price reacts. You there, Jamal?
Yeah.
I thought I lost you. I want to show traders how they manipulate, how they create these multiple tops. For what reason? They want people to sell against them again, to load up for further run-ups and downs. Okay, that's how it happens. That's the psychology in action in the market. Broken down, how they don't take out a top. Why? Because they want people to sell. But guess what? Before they went up, they cleaned out all these lows here quickly before they continued upwards. That's all psychology. Why? They created a strong support level there. So-called nonsense support doesn't exist.
Yes, and you know what's quite fascinating, George? What fascinates me every time? Look, at the end of the day, it's a two-dimensional chart. But, you know, the smart money succeeds in killing the guys who try to trade a reversal, also the guys who try to trade a pullback, also the guys who try to trade the breakout, also the guys who tried to scalp. So basically, you would think intuitively that, you know, I mean, come on, one of those groups must win, you know, but as I have shown, and that's a big part of my work, by the way, I have shown the principles, and what here you see the output, why the smart money actually succeeds overall to let all these kinds of strategies loose, all these traders as a group. Of course, not every single trader. There is a dumb money tolerance. They need to eventually do the move. They eventually need to do the main target run, as George shows here, to basically complete their main mission, to take the biggest group into loss. So there is a dumb money tolerance. So there will be traders who, by luck or by knowledge, will be on the right side when that happens, but not consistently and not knowing that they were on the right side here. And that point, George, still fascinates me, that the smart money is so efficient these days, and that's also why they are completely automated, that they take all these factors into account, and obviously they see them live, and they have full execution power over the price, and they move the price in such an efficient way that they will get all of these groups, all of these traders as a group, not individually, of course, but all these traders as a group, and their psychology. So when George comes from his perspective and says, look, these guys here trying to buy, for example, buy a dip, buy cheaply into an uptrend, right? Buy the pullback. These guys are accounted for. And that, guys and girls, is the reason why the game is complex. It looks simple. You have a few lines on a two-dimensional chart in front of your eyes, and actually it's a three-dimensional chess game.
Anyway, so yeah, you can see it visibly. There's 1 day's low there, equal days low there. You see that didn't break it, but look at this cluster. Look at the low stacked up, right? Now, quickly, as you can see, that's a daily top here, that thick line. That thick line is another daily top. You see, they get to it, they hardly just break, right? Just above it, with supply and demand traders, they say, yeah, you got to allow 30 pips or something, and they're going to sell against this, and guess what? They snooker them. There it is. There's the losses created. It's just all psychology. That's all it is. There's no such a thing as support and resistance or supply and demand. Why? Because it is just the way the market moves. And you see that they hesitate here, they come off, then they break through it and come back and rest on it. You see? And what they do, there's the next day's high, the hesitation there. See the hesitation, right? One quick clean out, that's it, finished. And they load up and they come down. Now, watch this. You see all these lows here stacked up this bottom line? You see the lows?
Yeah.
That's the herd support mentality validation. That's the herd, the sheep. They get them to think that it is a support. Now watch these lows here. If I zoom out like that, there's the lows stacked up here, and look at that. They come here, and I'll zoom in here to the bottom line. See, they get to it, and look how they missed it. And they sat there at the 15-minute chart. That's an hour and a half there. And eventually they slowly clean it out. It's a very unusual move for them. Why? Usually they clean it out with one bar, but in this case they did not. And there's the next day they ended up continuing. So my advice is go and study charts the way I'm just showing everybody. That's my opinion. It's up to everybody. People say, oh, but like it means nothing. No, well, it's up to you. So now we've done, for example, this valley here, right? Like I showed before on the way down. Once you finish the valley, you delete all the lines, take them off the chart. Go back a year to a year and a half, guys. That's my suggestion, and study it. It's up to you how precise you want to be. Once you finish with that, you look for pyramids, and again, study the lows on the way up and study the chart on the way down. Again, there's the rundown. I'll guarantee you, if you look back, you're going to find that all these lows, they coincide with the lows here. You see, there's a low there, there's another low here, and there's the clean out continuation. Go and have a look at it. It's up to each individual how detailed they want to do this work, but this is just systematically there on every single time frame. I'm not going to talk any more about this here because there it is. It's up to each trader. There it is again. See that? Look at the stacking of the lows. 1, 2, 3, 4, and there's a 5. 1, 2, 3, 4, 5, and there is a continuation and clean out. It's simple. There's the high, there's the hesitation, there's a slight breakthrough. They come down again. You see how they create that support mentality? See that? See that, Jamal? One there, one there, one there, one there, one there, and look at that one bar. Bang! They cleaned it all out.
Yeah.
That's it. If the trader watching here is serious enough, they will understand what we're talking about the stacking of lows and stacking of tops and the clean out. It's up to them now to go and look into their charts, do their own study, and it's up to each individual trader to do whatever work they want to do, because I'm not going to go any further about this.
Yes. So, George, I've called those kind of formations, I've called them grail patterns because it looks like a grail or reversed grail when it's the other way around. Now, obviously, George, look, when you go through the chart, you will see those patterns over and over again. However, especially now, for example, if you keep that chart, you will also see those periods where the price goes really with determination in one direction, what people call a trend, yes? Now, in German, we say gefährliches Halbwissen, yeah? Which means something like dangerous half knowledge or whatever. This is not a complete strategy. What George is saying is be aware of this general predominant dynamic of the market. It is relevant because those levels, I call them plateau stops, what George is marking there. Those are the levels the smart money tries to clean out eventually, not instantly. Otherwise, it would be easy, right? If there's just an open grail or liquidity gap, however you want to call it. Of course, all these moves are inner range MTS, so medium-term stop runs. They're the predominant moves in FX. They are stop runs. But of course, what George is saying, study the nature of that price movement to be aware of it. But he's not saying, oh, open a chart, identify it, and then, oh, look, there is a target zone there, so now I'm buying. No, it's not that simple, because guess what? Look there. The first took out the other side with this big pin, which was the flash crash, by the way, as I call it. So it's a big pre-counter move. So they first clean out the other side, and then, for example, eventually they take the target zone. So, yeah.
Yeah. Well, I'm gonna show them. Actually, a lot of people don't understand how the crash happened and why. A lot of people don't even government people. Yeah. You see that? You see these two lows stacked up here. There's the blow through there. You see? They cleaned it out. Now look at these stops now stacked up here. Now, once the market goes back up, that's a very, very high candidate for a raid. They're going to raid this area. Why? There's just so many stops here.
Yeah, 1, 2, 3, 4, 5, 6, 7, 7
That's a
highs.
four hourly chart. Now, these are multiple weekly tops.
Yeah.
Now, like I said, Jamal, I've showed enough. As you can see, if I extend this here, see that there's a cluster, there's bottoms here, there's a bottom there, there's a two bottoms here, there's bottoms here, and there's a clean out. See that?
Yeah.
I'll take it there, and I'll show you. There's all the lows stacked up. You see them there? Weekly low there, and there it is. Look at that. One quick move, bang. 2 4-hourly bars cleaned them out completely.
Yes. Now, if you keep that chart, George, and you zoom out, this one, some people will say, well, yeah, but why, if you move your mouse to the 30th of November, and there's this little plateau, move it to the right, to the right, to the right. No, the cursor. So
hang on, November, you said?
Yeah, so yeah, exactly there. Can you move the cursor a bit to the left where you just were there? Oh, to the left. Yeah, this one. Now, some people will say, well, look, they cleaned out the low, so now they should go all the way up to that plateau there. And what happens is they first did the flash crash and the huge move down before taking that plateau. So that shows you that knowledge as such is, of course, not a trading system. It's because in that case the smart money had to prioritize. They first had to clean out all the longies, the dumb money longies, and in this case the flash crash, as I call it, which is just a stop run, was targeted at the longer time frame. So they went for the stops on a higher time frame and finished off business which was planned for a long time. And that was prioritized by the smart money before they did the move up and before they took that plateau there. So that's what I'm saying. Look, this knowledge about the cleaning just gets you so far. Now, if you want to trade something like a setup on that, a lot of work is required because you need to have the right filters. You need to have the right, things on your checklist. So it's not that easy, guys.
Well, I'm gonna show that. In fact, we'll do it right now. I'll explain what happened with the crash. Okay.
Yeah.
Now, we had people in Australia here at the time said, oh, the crash is going to affect the economy, is going to affect the imports, is going to affect this, is going to affect that. That's how naive these people are. They have no idea what's going on. They're either ignorance, these politicians, or they playing just sheet dumb. Okay, in front of the public. I will explain the crash. There it is. That's the crash, by the way. Right?
Yeah.
I'll give you my take on the crash. Watch this. Now, as we can see, 2016 low. We have the 2016 last quarter high. The 2017 first quarter, second quarter, which is also the yearly low. 2017 low. This is 2016 low. We're talking yearly lows. Now, watch carefully what's going on. Exactly like the example I showed you before. This is all institutional trading. This is a weekly chart, right? Now, what happens here? You got all these buyers coming into here. And what they do, they retrace the market back, creating the 2016 low. Now, what happened after that? Watch this level. This is where the secret is. This is what a lot of people don't understand. Is this. They created that high. They pre-plan everything. Now, what happened here is this. All these buyers here obviously have the stop losses here. Now, these buyers will not move the stop loss until they confirm that they can move them higher. Why? They want to see the market trending. So this is how the market maker applies psychology. They create these trends so they can take away all these stop losses at a better place where they want them to be. So they create the last high of 17, they create 16, I should say, and they do the low 17. Now what happens? There's the last high. Guess what? There's a quarterly high, another high. Okay, here. What happened? They missed that. Why? They're creating a mentality of a resistance level, a psychology. That's a strong resistance. It cannot break. Right. Look at that. What date is that? That is May, and that is July. That's the May. There's the first quarter high. There's the second quarter high. There's the third quarter high. July onwards. That's a quarterly high. Two quarterly highs are in here. Right
Yeah.
here. So why did they do that? They're creating the herd mentality, the herd resistance mentality. So these traders here that bought here, they're waiting to see if this market is going to move on so they can trail their stop losses from the 2016 low to the low of the 2017.
Yeah.
So the market maker plays with the psychology. What they do, they create a resistance on two quarterly tops. They could not break that last quarterly top. That's big stuff. That's big institutional levels. Now, what happened here? How many bars did it take to blow through?
One.
One weekly bar cleaned out all the stop losses that were above here, haven't they?
Yeah.
Now, what do they also teach us?
That you should
Previous resistance becomes future what?
support.
Thank you very much. How did they apply their psychology? They created the resistance mentality. They broke above it. And guess what? They came back and leaned on it as a support, didn't they?
Yes.
Now, there's the high that broke through. Did they break the high or not?
Yes.
Doing what? That's the high of 2018 now. Now, with these institutional traders, if we wipe all this mess out and look at it, we have a swing up like that, a swing down for the yearly low, and then a swing high to the next year's high. Look at the trend they created in place. Now, when they broke this so-called resistance, came back and supported the market to validate their sick and ill mentality of these ignorant traders down here, and they call the institutional traders smart. They're not smart, right? What they do, they validated their ignorance by showing them resistance followed by a support and go higher. Why? To confirm the market is trending up to go to the moon, isn't it?
Yes.
Well,
Can I
guess
make
what?
something, George? A very important comment from the market causality perspective. This example you have just shown, I can show you from the causality perspective that, as you have just explained brilliantly, George, why this chart pattern was put into the chart as they did. On top of that, I can guarantee you that from a causality perspective, the chart is full of red bars. So not only does the smart money succeed in doing the stop runs as explained just by George, but they also manage to lure long-term dumb money position traders into shorting again and again and again into the same move. And that's a fascinating point, because not only did the smart money succeed in doing the stop cleaning and the what George calls herd mentality, or as I call fake resistance, which is fake, it will be broken, it's not real resistance. But on top of that, they also succeeded in getting position traders to try to hold it into a massive drawdown. So that would normally sound very, very contradictory, but it's not. That's my whole point. People don't get it. It's not a contradiction. They succeed in doing all these things simultaneously. So not only did they succeed in getting, for example, here, the money short traders to sell and to think, oh, this is a resistance which now is respected, and they just blow them out, for example, with news or whatever they use in order to do that quickly. But at the same time, while they are doing this, they succeed in getting the dumb money short traders who are already in the market, who are already in loss, who are already in drawdown, who are already close to margin call potentially. They succeed in getting those guys even increasing their losses. And that's fascinating, isn't it, George?
Well, I mean, say no more. Look at these. Look at that yearly low. Look at these lows at the green line stacked up. Why? They're creating the opposite of what happened here. They're creating a herd. I call it herd. Why? A herd of sheep, because that's what they are, sheep. And they create this support mentality. Why? They want every time the market comes down, load up buys. You see? Now, what happened on a night, dark night without a moon, beginning of January of 2019, these guys come down and look what they do. They cleaned out that yearly low. Why? They created this false trend nonsense, right? Why? They want traders to trail stop losses here. They need them for their book balance. These are big multi-million-dollar operation institutional traders.
Yes.
And this is how they get traders feeding out of the palm of their hand. And on the way down, what they do, they stack up all these lows here. See it? And there's the blow through. One bar, as you can see it. One bar. One bar. See it?
Yes. And another footnote in that context, I need to make the footnote because people are confused by that. People have to understand that on the dumb money side, first of all, nobody is stupid on the dumb money side. They're just at an informational and knowledge disadvantage. But also on the dumb money side, we have corporations trying to hedge against what they call forex exposure. For example, Siemens has income in US dollars, wants to change them in euro and so on. These trader groups have they try to hedge. They're not speculating. They're not even necessarily trying to get a profit, by the way. But if they would analyze over a 10-year period what the hedging got to in the end, they will find that they all in the end lost on their hedging because of what George just showed. Just as a footnote. So not every market participant is in there to speculate or to profit even. There are entities which need to place orders in the market. They have no choice, just as a footnote on the mechanics, because people get so confused. They get so much misinformation. They can't put one and two together. So understand that the market reality also implies that in this the world's biggest financial market, there is what they call hedging activity going on, where corporations who are not in the finance industry want or are forced to place certain orders in the market. And that, of course, also gets exploited by the price makers.
Anyway, Jamal, this is here. That's the pound yen today. Yeah. There's the last high of yesterday. Look at all the tops stacked up here. And why? They want people to keep selling every time the market comes to them. Sell. No, this time failed. That's how they snooker traders in. But anyway, that's that. We will leave that for the moment. Now, I want to move on to the next part, and I want to take them into here. I'll show them, by the way, another chart here that I want to show.
Fantastic, George. I love that stuff, and yeah. It's so cool to talk to someone who gets it, like, can you understand, George, how frustrated I was at times, like I felt like maybe I'm the one who doesn't get it. You know what I mean? So it's fantastic. And I love that you also have your own style to show and explain that, and which for some people is also very accessible. And I also like the language you created. It's nice. It's good words. Okay. Yeah, this is a great example. Yeah.
There's a target, by the way. They broke through that. They didn't go to that target. They just cleaned out all the stops before moving down. And I put this chart up. Like, look at all that's a full hourly chart. That's a weekly top there. That's a weekly top there. That's a weekly top there. Another weekly top here. And they got cleaned out, 4 weekly highs.
Yeah, the cable one. Yeah, I remember. And yeah, exactly. And it was exactly like we both posted. Fantastic.
Jamal, this is the kind of stuff people need to try. I will not teach any more than that. I don't share any more than what I'm sharing publicly. Now, I want to now talk about, guys, here, I want to show you this. Here, this is how precise I can enter a market. You see where my entry is? Jamal?
Yeah. So in terms of your own approach, you like to trade, George, once the stop run has been done and there's the exhaustion back into the range. No, you like to basically look for those situations like you call them your playground, no? And then you like to use your tools like the TMA to find a potential
Right.
exit back into the range. And that's another thing you explained beautifully recently. Um, People may call you a counter trend trader, but you could also say, no, you're not a counter trend trader. You just try to get the best seat in the house because
Yeah.
apparently sometimes that gives you a nice entry into a bigger picture move, isn't it?
Well, that's the point I was just about to mention. You beat me to it, and that is, like this would have been definitely in my TMA zone. Okay,
Yeah,
I would have picked this low, no problem. Jamal, I only trade the extremes of the price, and like I said, people say, oh, counter trend trading, you only got to pick up few pips. No, 95% of days I am picking the top and the low of that day. 95% of days I pick the high and the low. Why? They always occur in my playground, in my pressure zone. The question here is this. Now this is a big uptrend, so-called uptrend. But the question is, I ask, if I'm trading short against this uptrend, I'm a counter trend trader. They call me a knife catcher. But the question I ask is this. Now that we look at the after event, am I really a counter trend trader, or am I a trend trader getting the best seat in the house because I'm a spoiled brat?
yeah.
You see? But
There's
people
one
don't
topic, George.
understand.
Yeah, I would like to ask you one question, George, and you don't have to answer that if you don't want to. But look, for example, and we can just talk about it in general terms. Um, for example, if what this shows you in your approach is that you have a lot of filters in place which allow you to do those high precision trades. However, as you know, George, when you have a system and you start to apply filters to your entries, what happens is quickly your trade setup number, so your trade frequency decreases. So can you give an advice to people in terms of, yes, I have a lot of filters which allow me to filter out all the setups I want to skip and to have a high precision. However, how do you manage to not over filter? Because most conventional filters, and you can also, people who don't understand what I'm talking about, just make an EA and test it on tick data and you will understand what I mean. If you have, for
No,
example, yeah.
Jamal, wrong. No, no. When I talk about filters, I'm not talking about indicators.
No, no, of course, but can you maybe elaborate on that topic, George, in terms of, because we know that you look at the range, you look at the higher time frames, you look at momentum on other time frames, you look at the herd mentality, you look at TMA on the M1, and so on and so on. What I wanted to know from your side, if you can elaborate on it, is
I'm going to do all that in a minute. The next example that I'm going to bring up,
yeah,
I'm just demonstrating how tight I can enter a market. I'm usually in within the top, within 1 pip, 2 pips, maximum 5 pips of a top or a low, because I'm very diligent, and this is why people like you and I, we can get it so precise, is because we are master traders. It's as simple as that. Whether they like it or not, we've mastered the art of trading. And if somebody doesn't want to accept that, it's their bad luck. I really couldn't care less what anybody's going to think out there, because I'm not here to please anyone. I'm only here to share what I know, and it's up to the individual to take this on board and make it theirs. It's as simple as that, Jamal. I make
yeah.
no excuses for what I say. I don't make any apologies for what I say. If anybody wants to continue being an ignorant out there, good luck to you. Go for it, buddy. Yet it costs me nothing if you lose, and I put nothing in my pocket if you win. And I'm only doing it just to help these guys that really want to understand the depth of what it takes to be able to achieve 98 to 99%. People say, oh, yeah, yeah, keep dreaming. Well, I'm going to show you how. It's not a dream. This is a dream that was created by me. I can achieve this, and I'm showing you. It can be achieved. I'm going to show you the detail and the depth and the precision that I go to, how I can detect one of these places of how to enter the market so precisely. And if the market does not stop, I have a very, very powerful combination, like I said,
Yes.
of hedging, compounding hedging plan, and a money compounding plan. Right. If the trade goes against me, I know how to turn this here into a basket And that's how I am able to achieve consistent winning days, day after day. On a day level, I am 100% consistent.
But it's good that you do that reminder. So understand people. So George thinks in terms of baskets. So for example, if he would have shorted 2 hours before the high, and then he may add another short in his playground as long as the setup is completely valid, because they will eventually, have cleaned out all the stops. Then, it will come in his favor. So that's an important concept to understand. People mistake what you just showed, George. People think that out of 10 trades you place, 9 will immediately come. That's not the case. What George says is he has such a high precision that in terms of baskets, if he places a trade, it has a high win-loss ratio. And even if the price goes against his entry, he just implements his planner, for example, to edit the second trade of the basket. And then in 80% or 90% of cases, the price comes to him or whatever it is. And even I think there are also 3 trades you may have in a basket or even more, isn't it, George?
Well, it can have any amount of trades, but let me tell you something now, that when I'm focused and I sit down and I really want to get into the market, I can guarantee you 90% of the time, minimum 90% of the time, my entry is inside 10 pips of a top or a low.
Mm. But how many setups on average, George, roughly would you get if you're so precise with the conditions and filtering? How many trade setups on a day on a market would you get? 1 or 2?
Well, before we go to that, let's say you're getting 2 setups a day and you're trading 3 pairs. There's 6 winning trades.
Yeah.
Right. But let me now expand here before I expand, remind me to go back and talk about the money compounding plan,
yes.
The last one I just put together. This is going to blow out a lot of people, and a lot of people are going to think that we are crazy. But I tell you what, I'm not prepared to show it. I have got it. I've got it made here. That's my money compounding plan here. I will not open it up because I'm sorry, I will not share it publicly. But I'm going to show you something that's going to blow everybody out of the chair, Jamal, and that is, we are dealing with a $12 account. I say to people, you don't need to risk more than $12 in your account. That's all. Now, this sounds absolutely crazy. Nobody would have ever heard this in their lives. And this is a reality. I've got it sitting here on this plan up here. $12 plan, that's all it is. You're not going to lose more than $12 as your account. If you have a $12 losing day, you've blown your account out. Now, this money plan starts with micro trade of 0.01, right?
Yeah.
Your account size is only $12. Yes, you can't open an account for $12, so you may have to open up an account with minimum $200. Or I would actually personally trade with about $1,000 to $2,000, but my account is actually only $12. Okay? You're trading 0.01. Listen to this one, Jamal. This is a freak out, but this is absolutely true.
I know, I love it. And you know what, Josh? I'm looking forward to people's comments.
Right. We start with 0.01, but then again, master traders can create, the boundless mindset can get you to create this kind of power. We start with 0.01 size, micro size on a $12 account maximum. We are looking, Jamal, for 20 pips a day in total. Mm-hmm. Between 3 pairs, all you need is 20 pips a day, no more, every single day. And any experienced trader can achieve this hands down. And that account will turn into $1 million in 42 weeks. Work that out. $12 will turn into $1 million in 42 weeks on 20 pips a day, starting with 0.01 with a powerful compounding plan. People don't have to believe it. I am so sorry. They can continue to be ignorance, or the other option is they can become a part of the 1 to 2% that are innovative, and that's how you can put things like that, like these plans together. No, I will not share it. I'm sorry.
No, don't share, George. Maybe just as a general explanation in that context.
I will. Okay.
Yeah. Look, And maybe can you,
Okay,
if you don't mind,
here, let me
George,
do it.
so
Let me do it. Let me do it.
regarding that example, can you just not explain to them the following points in that context? One is,
Yes, listen,
yeah,
here, let me do it. Let me do it. We're talking about 20 pips on a GJ on the pound yen. The money factor is 1.25 for me, Australia, meaning that every pip is worth like every what do you call it? Every micro trade is 12.5 cents. Every mini trade is worth $1.25. Every contract is worth $12.50. You with me?
yeah,
Right. So you're looking at 20 pips. So if you're trading 0.01 and you pick up 20 pips, you accumulated $2.40. Right?
and that 20 pips is net, no?
Correct.
So, yeah.
Right. And that's nothing. 20 pips is nothing, Jamal. Right?
See,
Now,
but just as a footnote, George, can you explain that, for example, in order to achieve those 20 pips, the trades you made on that day, for example, the hedge for those trades would be away like what, 30 pips, 20 pips?
you know, like if I really want to basket trade, and you can easily off the pressure zones, you know, if you trade in baskets of say 4 to 5 entries, you know, I'm telling you now, you get 30 pip bounces there. You multiply that by 30. If you got 5 in there, 5 times 30, it's 150 pip basket immediately.
Yeah.
You're only after 20. 20. That's all. Not 150. You're after 20. So 20 pips on a micro size is $2.40. Accumulate that over 1 week. That is actually $12. That's your account size. So that's how it is. You start small. Now, just to give you an idea, Jamal, at the 42nd week, the amount of money you made that week, when you average the combined profit you've made over the 42 weeks, yes, it sounds crazy. You're only making $2.40 the first week for some of these new starters. It sounds nothing, but let me tell you now, when you average out the total profit, that week all of a sudden turns into 24,000 and few $100 a week across every single week. That's your average weekly winning, over 24 grand.
And George, what about if you have a very long time period? Yes. And what about black swan risk? So what if once in, let's say, 2,000 times you get filled on all 5 trades in a basket, but then there is a, let's say, a black swan event or whatever, and it goes completely the other way?
No, Jamal. Unfortunately for everybody, fortunately for me, all trades are closed the same day. Now, what people don't understand, martingale, no, that's nonsense. It's not martingale because martingale is created by amateurs and ignorance. But master traders don't do martingale. Why? Because I have a grid factor. And the way I trade, Jamal, it doesn't matter how many pips the market goes against me. I don't need that market to reverse to make my profit. No, I need very small retracement to go into profit. It's the way I actually compound my trades. Will I talk about it in detail? No, I don't do that publicly.
No, that's exactly the point. So thanks for just commenting on that one. Because, well, of course, we're not talking about martingale anyways. Martingale will just lead to a blow up. But just as the last comment on that particular scenario, let's assume that one single day out of a big sample, so you can already make money, you get filled on your complete basket, it goes against you. Of course, so what I want to say is you need to have an idea how to exit those hedges efficiently. But you know what, George, I don't want you to stand here naked in front of us. Jesus, you have already shown enough. So let's continue.
The smart idea is that you limit your losses.
Yeah.
Right.
Can you,
number one.
yeah.
Number two, let's say you get a grinder of a day. And I make it no shame to say that I'm a counter trend trader, absolutely. But as I said, what am I? Counter trend trader or the trend trader of the new trend? Again, I don't have losing days. Why? Because I'm an intelligent trader. I'm an informed trader. I'm a complete trader. Why? Because I know where I need to trade. I only take the best. I only trade when I have a probability of 98 to 99%. That's why I don't have losing days, because I'm very selective, and I can be. Why? I'm only after 1 to 200 pips a day, Jamal. I'm not after more than that. That's enough for me. That's all I want.
And obviously, in order to have all those kind of values, look, this is a result of George's screen time, and experience, and it doesn't fall from the sky, ladies and gentlemen. When he was emphasizing in last podcast, that you have to, do your homework. This is what he's referring to, because he has, and of course, there's discretion in there. For example, let's say there is this one black swan scenario, and he has to decide where to change the hedges and so on. Of course, there's discretion involved in that, but George's brain is better than a simple EA, for example. He has all these things going for him in terms of the experience he has, the screen time, and of course to combine that with his compounding plan and boundless mindset. That's powerful. So what do you have to do? No, don't try to copy him. Try to find your own way, incorporating those general principles. And yeah, just continue, George, because
we have more to cover. Boundless, guys, boundless. Trust me. Learn to become boundless. You got the link for that video. It's up to you. Like I said, Jamal and I refuse to spoon feed anybody. I don't do that on the project. I will not do it here. Okay, so basically, when you become so precise, and so when I show you the next examples coming up now, you will understand the precision, you will understand the depth, you will understand the full detail, you will understand how deeply I understand the psychology applied by the market maker. I'm going to show you a real example now of how psychology is applied, Jamal.
Yeah.
Right. Now, first of all, here's one chart. Here's the second chart. Now, watch the price action in this red box here. Now, there's one chart, and there's a second chart. How similar do they look?
Quite similar.
Right? I'll even show you exactly what I mean by that. That's Frankfurt Open. That's London Open. Frankfurt Open has an up bar followed by a higher bar. London Open, one bar followed by a lower bar, reversal bar. You see that?
Yeah.
Now we'll go to the second image. Frankfurt bar there, followed by a higher bar there. See that?
Yeah.
London bar followed by a lower bar, which is a reversal bar. Exactly the same setup, isn't it?
Mm-hmm.
They are 3 months apart. I won't talk about what pair it is and what month it is.
Yeah.
But they're 3 months apart, approximately. Now, as you can see, they're exactly the same setup. Now, I'll show you how psychology is applied, which is here. Watch carefully. This is amazing. Now, there's Frankfurt, there's London.
Yeah.
Now, watch very carefully to what I'm about to say. There's the high of the day up here. By the end of Frankfurt, which is 4 15-minute bars, the market has clocked 110 pips. London comes in, opens up with hardly any rally, and runs down a big bar of 35 pips. Watch carefully. This is very, very important. So we have 110 pips on the table until the end of Frankfurt. London comes in and puts in a 35 pip bar. Question here. How many 15-minute bars there is to an hour? 4.
4.
If we did 35 pips in the first bar and they repeat that speed at 4 bars in a row, how many pips the hourly bar is going to be?
140.
140 pips, you'll end up with an hourly bar. That day had no news. What are the chances of a pair that have an average daily range of around about the 130 to 140 pips, when it already clocked to 110, to come here? There's 10 pips there, so there's take off of the 140 pips, 10 leaves it 130 to add another 130 pips on top of this 110. What are the chances of this pair doing 240 pips that day at the London time when its average daily range is that? Buckley's.
Very low, it's possible. Yeah.
Right. So when did they do this manipulation? There's the psychology. This is manipulation. The London bar comes in sucking sellers into the market. This run here happens to be approximately 75 pip range here, guys. That's not a small range. 75 to 80 pips here. That's a huge range. But there it is. They open London. They want to suck sellers into the market, so they create this frenzy sell here. And this bar, when it opened up, there was no interlocking between them. Opened up, bang, straight down, and then reversed it. That's exactly what happened on that crash. You had, I won't go into that. Bar to bar, back to back. Now,
but just as a question, George, this is a small question. So that kind of concept, would you apply it every single day? So would you always look, oh, what's the previous session? And then, is it exaggerated? I'm far away from the average range. The likelihood is high that...
Let me break it down. The question is, I'm looking here at the London Open. First of all, what time of the day am I trading? Listen to my filters. I'll call them out one after the other. What time of the day am I trading? London Open. How many pips do we have on the table? 110 pips. What did the 4 hourly bar look like? Is it a down momentum? Is it an up momentum? What did the 1 hourly look like? Was it an up, down momentum, an up momentum? Okay, now if this was to continue, how many pips are we going to have on the table? Okay, what is there on the backdrop, which I will go into detail in a minute? Like all these filters, I am taking into account as the market is moving, like a high-speed computer analyzing all these factors into play. Yeah, it's London Open. There's 110 pips. It's done 35 pips, followed by another bar. No retracement there. There's no retracement there. And I'll come to the next point. This point here. That's why the market stopped there. Right? I'll come to that in a moment. All these things are at play in my mind. The 4 hourly chart, what's it doing? The 1 hourly chart, what's it doing? Where's the next target? How far is it? Can it reach it? You see, all these filters come into play. There's at least 15 filters at all times running in my mind when I'm trading, Jamal.
Yeah, that's one thing people didn't understand, George. They see your clean charts and they think it's simple. And that's what I tried to explain. So there are loads of filters George has, already prepared and which he uses every day. Now, just as a small question regarding the 1 hour and 4 hour, George, because obviously on those timeframes, you will also have the herd mentality games and the, outstanding inner range stop runs. So would you look at that, or would you also consider what the general momentum, so the trend, as people call it, is on those higher time frames in that context?
No. Well, everything counts, Jamal. Everything has to be taken into account. As you can see, there's the low of the day there. So until then, they broke it well and truly by a lot of pips. But there was another low, if I remember correctly, the day before here that they cleaned out. Okay? Now, question here is that why did the market stop here? Why did I expect the market to come back here? You see, that's the very, very important question. This is what I'm going to show you now, the depth and the precision that I trade with. And that is, number one, there's a psychology broken down, how psychology applied. That's not a sell continuation. That's a sucker's move. That's psychology. Right, there it is at play. Why? Because when you look at the number of pips on the table, the number of pips they did here, that market was not going to do that kind of pips. It's not sustainable. That market has to come back. There's no two ways about it. 100%, not 99%. That market had to come back.
Yes, but George, let's say you did this analysis, and let's just assume for the sake of explaining, let's say you made a mistake and it continues. I guess that loads of times, even if, for example, there is this one day where the market goes far above the average range, still there's a high likelihood that before it did it, it made a pullback back into the range towards you. So in that context, of course, no, not the hedge. I'm referring to the exit. If you're looking for a 10, 15 pip exit, you may actually be able to pocket it before the market completely goes in a 1 in 200 days sell-off. So even though your overall analysis wasn't correct at the end of the day, there's a high chance that your trade worked, isn't it?
Well, put it this way, Jamal. Now, the question is, there's a reason why I don't jump at the London Open. I'm not going to tell the reason. I'll let traders go and do their own work. Okay, go and watch every time London opens up, whatever pair you're trading. If you're trading anything to do with the pound crosses, for example, right?
Yeah.
That is, go and do your own work. I'm not going to do your dirty work for you. Go and do it yourself. Don't be lazy, like a lot of people out there, right? I expected this, so I wait. Why? Also, too, what was happening here? This was in the TMA pressure zone. That's another factor.
Yeah.
Right. And in the TMA 15-minute and hourly zone as well. Right? All these things count. Now, also, why did I expect the market to come back? Because if we look at that bar there, Jamal, and that bar there, this may look, a lot of traders ignore this until I started to talk about this lately, is that these are all signs and signals. Okay? I picked up all this. That's where my target was, right to that green box. Why? Because that bar there closed at 260. The bottom of the body was 260. The high of this bar was 259. Now, last time when I remember going to school, I remember that 259 was lower than 260. Am I right or wrong? So that bar there has a gap to the body of that bar by 0.1 of a pip. 0.1 of a pip. It may sound irrelevant, but why did the market stop here exactly? They came to close this gap.
Maybe, Judge, as a suggestion, maybe you can call that mini gaps. Otherwise, people get confused with liquidity gaps.
I don't care what you want to call them. It's irrelevant. It's understanding what the power of them that exists and how you can trade around them and understand the psychology at play here. It's a psychology move. Frankfurt running the market into the London Open. Okay, it's psychology.
Yeah. So just as a final footnote on that, first of all, you can see how detailed George's approach is. And secondly, so he was really referring to the actual mini gap here, not to the liquidity gap, which is like an inner range stop run. So just for people to not get too confused. But it's fantastic to listen to someone who has really, done the pre-work and explaining, giving us a taste what is going on in his brain. Look at that, guys, And
that's a price gap, not a liquidity gap. The actual price gap with my broker. And that's a target for me. And there it is. Look where it stopped. They're not interested in that. Right? Now watch carefully here. We haven't finished yet. Also, the next bar, look at that. We have a close of 0.59, a high of 0.63, 0.4 of a pip interlocking in the bodies. Go and study your charts, guys. Is this significant? Well, go and do your own work. I'm not going to answer your question. Right? These two bars, the interlocking factor here. Now,
let's pay attention to detail here.
Yes. Now, that's enough for anybody. It's up to you. Go and do your own work. Okay, there it is. There's the gap. There's the market stopping there. Exactly there. Why? They just went enough just to close that gap. Okay, another thing too. Yeah. Why did the price stop here? That price there. A lot of people ignore these things. They don't take note of them. Yeah. You see this bar and that bar? This bar and that bar. Yeah, there's another gap there. 167 close, 141 high. Look at that, 2.6 pips gap.
If you look at this on different brokers, George, is it still?
Well, if your broker doesn't have this gap there, well, bad luck for you. But my broker is very precise with the pricing. Okay.
No, but like if you have different brokers, of course there will be those tiny differences, isn't it?
There can be differences, but when a gap is there, it's a gap, whether we like it or not. Now look at that. We have a 167 close, and we have a 141 high. Right?
Mm-hmm.
Now look at this bar. Look at the top, 164. They missed it by 0.3 of a pip purposely. And what did they create? they created this reversal. What do they call this? A doji or some garbage? That people believe in this nonsense, absolute stupidity. They're trading bar shapes or whatever it is. No. Now, look at this bar here. This bar came and closed that gap exactly. Why? When they do this reversal shape, that's when I'm loading up because I know they missed it by zero point 0.3 of a pip. And creating this reversal, I know that's purposely done. They're going to come back and close it up. And that's exactly what they did. You can pick this. By the way, that's about a 25 pip bar. There. That's not light. Okay? So I'm just showing everybody the depth, the detail, the precision of how I view the market. Okay? That's it. No more. I don't need to show anymore. It's up to each trader to go and start to be diligent, open eyes, and be unlimited in their thinking on looking at the chart in full detail, every time frame, every detail, every swing. It's all there.
Yeah, and I mean, like, what I would suggest everybody, look, you can also have an approach which has a lower win-loss ratio and which has reasonable drawdowns, but it will be helpful if you try to incorporate those topics which were discussed here, including the herd mentality, pressure zones, including, the stop runs. George has shown other stuff here, like the filters. He has even shown the mini gaps, and then, of course, he has even shown something, the compounding plan, which is another topic on its own. But these things, you can make your own version. You can also create some kind of EA which takes into account those points. And I tell you what, it will be so much better than all the standard indicator-based, strategies which are out there. I mean, I can tell you, it will be a massive improvement to, for example, if you have a tool to capture, let's say, the stop hunting as it was shown at the beginning, and it does it to a certain precision, and you use that tool as a filter, it will be an improvement to your approach, just as another hint. So yeah, this is valuable stuff, George. You can't find that anywhere.
I want to ask you a question, and I want traders, fellow traders out there to ask themselves, how many indicators did I use tonight?
Yeah, you don't use indicators, but obviously, as you have mentioned at the beginning, also with the moving averages, you use the tools. No, like the TMA, you use it as a tool, no?
Yeah, but in everything that I explained, that 15-minute chart, how many useless indicators did I use tonight on that chart?
Yeah, zero.
How many? Huh? Zero. Didn't I?
Yeah.
Indicators are useless. You don't need them if you have an understanding of psychology and price action and how the psychology is applied to it. You don't need indicators. Indicators is for amateurs, for ignorance, people that don't want to learn this business. They're lazy. They want indicators created by somebody else. I don't use anything created by somebody else with the settings of somebody else. Yes, I use a TMA tool. That's a very unique tool. It's not a standard MT4 indicator on the custom indicators. I don't use them. They're useless.
Yeah.
Why? They're not consistent enough like what I do. And the TMA is not consistent. But the question is, I created my own, which we don't have time. We're already running close to 1 hour and 3/4 here. That the TMA, the way I use the TMA, I have my own trading approach, my own baskets, my own understanding that I don't go into detail about. These guys, MT4 standard custom indicators, chuck them in the bin. They're not consistent enough. Precision is a completely different game to what you guys are used to seeing. I have a very, very high standard of acceptance in my book for myself. And that's the way I like to trade. If you remember the 3 enemies that we talked in the last video, the first one was the psychology. Go and master the psychology. I've done that. The second one, the first one was oneself. Okay, work on your mindset, become boundless. Second one is the psychology applied to price. And the third one is losing trades. Well, I've stopped losing trades. I don't have them anymore. Why? I've mastered the game, and there it is tonight. I'm showing you why and how you can actually get rid of this problem here, and that is get precise. Become precise. Good enough is not good enough.
Yeah, in that context, but George, I'm sure you could, rather than hedge, you could use stop losses, right? I mean, as you have said before, you would save a bit on the transaction costs, but obviously then you wouldn't be able to just, exit the hedges at a later stage, which is a huge disadvantage for you, no?
Well, Jamal, all these people that make excuses, in the States we don't have hedging. Well, you know what? Stop loss is cheaper. Why?
Yeah.
Because you don't have to carry both sides of the hedging, the buy and the sell. But the only reason I use hedging is because it shows me the balance at the bottom of my platform. What is my actual drawdown, if there is any, right?
Yeah.
Now, and believe it or not, when I close everything's closed, including the hedges. I don't keep them to close at a later time.
What do you mean?
I don't leave my hedges for a later time to close.
Right, yeah, exactly. So basically you try to get out of it as soon as possible, no?
I only use the hedging as a protection, limiting my drawdown on a particular single trade, limited to a certain number of pips. Why? Because the next trade is going to compensate me for that. But if you leave this open, so many pips, if the market goes against you 30, 40, 50 pips, you'll have to recover all of that.
Yeah. So does it mean that sometimes, for example, if you have another basket and it works, then you would close the profit of the basket together with the hedge?
That's why it's called the basket. All the hedge trades and all the active trades get closed in one hit once I reach a positive number.
Yeah. So you would only do that. So all those trades would be in the same direction. It's not that you would, for example, have the hedge open and then take profits on an opposite trade, or can it happen? Because,
if I am selling against a run-up market, I have a sell here. My hedging is a buy, but all my trades are sell trades.
Yeah. Okay. So eventually, and according to your rules, you would then eventually take profit on the buys and then write down the sells, no? But obviously, because you took profits on the buys, you only need to write down the market to a price above the entry of the sales, no?
Well, I mean, if you got a sell and a buy here, and the market goes further up here, you can release this buy if you want to.
Yeah.
Right. But the thing is, my compounding plan is so powerful, and not only that, people say, "Oh, wait till you get caught in a grinding day." Well, no, your I'd like to use a heavy word, but I won't use it because these ignorance out there is that I have come up. I took out of the market not long ago 6 months out of the market to master a couple of things, and one of them was, how do I detect a grinding day? Well, guess what?
Yeah.
I have mastered this. The market will not catch me on a grinding day. Why? Because I know exactly what to look for to detect a grinding day, Jamal. I found the secret.
So with grinding, you mean a strong move?
Well, very, very small, shallow retracements. It keeps grinding in one direction.
Because grinding, intuitively, I would rather think you're referring to a flat day. So grinding, you mean a strong move in one direction?
Correct, either up or down. And I've found the secret to detecting these days, and I know how to detect them. I can smell them a mile away, and that market will never, ever catch me in a grinder. That's my answer to these ignorants who are knocking it, that, one day you'll blow out. No, I won't blow out, you fool. Excuse the terminology I'm using, because they're a bunch of fools. Why? Because they don't want to learn. They just want to knock because they're losers.
Just a footnote.
I don't get caught into grinders. I know how to detect them. I've mastered that.
Yeah, as a footnote in that context, I had a friend, George, and all his work was focused on finding the grinding days. And he also was able to pretty precisely predict when grinding days would occur. But I will not, of course, elaborate on that in that context because that's a completely different topic. But there are ways to, identify, okay, which could be one of those strong movements.
The time is gone very long. We haven't talked about the TMA. I was planning to do it, so we're going to have to do the TMA the next podcast because explain how it's all done. So I'm going to leave
Yes.
it to that. There will really, in reality, as I said, I have three anchors to my trading. I have my psychology as number one. Number two is the actual targets, which we talked about tonight. And the number three is the TMA, which we'll talk about the next podcast. So in reality, there's only one more podcast to come that will actually go through my whole trading theory and approach. After that, we will see what we're going to talk about from there, Jamal. So
Yeah,
for
sure,
tonight,
George.
I have nothing more to share because I am also starting to get tired.
Of course, George. Look, thank you so much. There was another tour de force. I absolutely loved that podcast. We'll try to upload it as soon as I can. Thank you so much for showing that. You know, it's of high value, it's very unique, and you are highly respected, George, and appreciated. And yeah, looking forward to the next one on TMA, which will also be interesting. Look, guys, girls, what you can take away from this is now you had an insight into the brain of an amazing trader. See what kind of precision and detail and pre-work is involved. If you, if you take away one thing from these 2 hours, it should be okay. It looks like a clean chart, but this gentleman has the stuff in place. If I want to come to the arena, as I say, I don't show up with a knife to a gunfight, but I put in the work before, because even then, if it's not good enough, failure can happen. The odds are against you. Most likely, you will lose. So here we have the unique chance to look into somebody's work who is part of the very small minority and who came there, and I say that again, with a minimum of tools, but just dedication. And that's why I will always respect you, George, because you are one of those guys. And you came up at exactly the right moment, and people now get a taste for what is required. If you want to work with a minimum of tools, and it's this kind of consistency, it's based on a strong, 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 strong fundamental basis. George, thank you so much, and we hope you recover well. And I'm looking forward to the next one. Uh, it's fantastic. I will watch this several times myself.
Well, Jamal, let me say that nobody out there is going to get to the kind of depth and precision unless they become in this group here, 1 to 2% of innovators. If people want to continue carrying on with the 80 to the 90% level of the imitators, these guys will continue to run average. Precision is this level, guys. This is who I'm addressing the work tonight towards, the 1 to 2% traders out there who are passionate enough to want to succeed, because I'm achieving it and I know I'm achieving it. I don't need the approval of anybody. Trust me. It's up to you. Do you want to be in this group or do you want to be in this group? It's up to you. I shared out of love and out of care for humanity and my fellow traders. It's up to you what you take out of this. But as I said, do Jamal a favor. Let him know what your thoughts are. Give him a thumbs up if you like it. Give him a thumbs down if you don't like it. So we'll get an opinion of what you guys think. But I'm telling you, go to post 2407, because to get to this level of studying, you really need to put a lot of hours in of screen time to watch this market live after you learn the targets theory. It's all explained in this post number. Jamal, you've got the project. You can put the link on the under the
Yeah.
video, and they can go and study this project. It's up to each individual. I don't need to know. I'm successful. It's up to you. Up to you what you want to do. I'm sorry. I mean, we're only sharing out of love, and you do whatever you like with it.
Yeah, what I loved about this podcast, George, that we could, communicate from those two perspectives, also from the causality, looking at the chart. I have not done it before in that manner. So also from me personally, thanks a lot, George. I think there's nothing more to say. We're looking forward to what you have to share in the future as well. And I'm really, really happy. This was good. You remember, Josh, at the beginning we had technical issues. I had to, replace the camera and all that, and I didn't even know whether we will be able to do the podcast. So yeah, a special thanks to you, George. Please have a great night. All the best to Down Under, and yeah, all the best wish and love from our side. We
Thank
love
you.
you, Josh.
Thank you so very much, and thanks to everybody who's going to put the time in to watch this video. And guys, like I said, it's up to you. And good night from me. Thank you, Jamal. Love you. Love everybody. Appreciate it.
Love you, George. Have a great night.
Thank you.
Goodbye.
Bye bye.